You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is time once again for Interview Tuesday here on the Options Insider Radio Network, the portion of our week where we're joined by guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We're seeing a huge influx of new listeners every month out there. We like to give new people a place to turn for information in these troubled times. So remember, if you like what you hear, keep rating and reviewing this content out there, wherever you're getting the show. It really does help the new folks out there, of which they are legion, discover the content and find their way to what we think is a pretty safe and reliable outlet for them. Of course, keep those questions and comments coming too. We do love to hear from you guys. Let's see who we're hearing from on the old Options Insider Radio program today. I'm pleased to say I'm joined once again by Mr. John Davidson, the CEO over there at the Options Clearing Corp. John, welcome back to the Options Insider Radio program.
Thanks very much, Mark. Very nice to be with you and your audience again.
Yeah, it's been a little while since you and I have chatted. I think the last time we chatted was face-to-face back at the last OIC conference, which we know was over a year ago now because there wasn't one last year. So it's been a little while, John. I don't know, one or two things have happened since then. But other than that, not much to talk about. What do you think? Pretty quiet time.
It's been pretty boring, pretty quiet, absolutely.
All right, let's get to it. I want to get to all the record madness in terms of volume going on out there in 2020 and continuing into 2021. But before we get to that, we have to dive into the elephant in the room. This conversation has literally hijacked almost everything going on in the options and indeed the financial markets as a whole. Of course, I'm talking about the madness, the frenzy that is GameStop, the stock being driven up from $4 to $20, and then from $20 all the way up to $500 and change, trading at a north of 1,000% implied volatility. The first time I've ever seen anything like that. So it's certainly a fascinating time. We have a poll out right now, listeners. Actually, you guys can go participate in it right now. It's live, where we ask you, this GameStop debacle, is it up there with other epoch-defining moments in the options market, like the 87 crash, long-term capital management, the dot-com crash, the great financial crisis? So far, 2/3 of you saying, yes, we're living in a post-GameStop world. So there certainly are a lot of ramifications to be felt from this, John. So I'm curious for you. You obviously run the Options Clearing Corporation. Clearing has become very much part of this conversation over the last week or so. What are your thoughts on this evolving frenzy that is GameStop and its ramifications for the market, sir?
Well, listen, the Options Clearing Corporation is the central counterparty for the options market. We become the buyer to every clearing member that sells, and we become the seller to every clearing member that buys, either for its customers or for itself. Our responsibilities are for the financial integrity of the marketplace, as well as the operational resiliency in the marketplace. And yes, there's certainly been record volume in certain individual securities and options on those securities. There have been record levels of volatility, but nothing that, from a clearing perspective, the OCC and its 107 clearing members haven't been able to handle very well. We have a number of levels of protections built into our system, starting with the admission standards, who can become a clearing member, our very sophisticated margin methodology uses valuation models and a 10,000 scenario Monte Carlo simulation for every underlying security. We have a very large clearing fund to make sure that even if our margin methodology should fall short, there are still large amount of funds to guarantee the financial integrity of the marketplace. And of course, we have liquidity facilities from a number of banks as well as other financial service providers to make sure we have the liquidity to meet our obligations. We have seen record volume. Certainly the month of January was record volume overall for the options industry and the Options Clearing Corporation. Over 843 million contracts traded, up about 62% from the prior year. We have not experienced any operational difficulties with handling that volume. So I think it's a good story about the plumbing of the options markets, which the industry has worked very hard for a number of years to make sure is robust and remains intact.
Well, speaking of that plumbing, it's become part of the conversation now, this intense debate over short selling, and in particular, a lot of people are misunderstanding the mechanics of stock loan and stock loan settlement and all the other fun things that go on behind the scenes. Aren't the sexiest of topics. They don't get discussed every day, but these days they have been thrust back into headlines. Now, you guys, obviously, Options Clearing Corp, it's in the name. You clear all the options trades, but you're doing a larger and larger portion of stock loan these days. In fact, the end of the year in December, you had about $100 billion worth of daily stock loan going through your system. So this is a marketplace you guys are engaged with pretty actively. I'm curious for you, one of the contentious points about this was that GameStop was able to be shorted beyond the existing float up to 150%. People are pointing fingers at the stock loan system saying maybe this system is broken, maybe the system needs a little bit of an overhaul. What are your thoughts? Do we need to take another look at stock loan in light of this frenzy that has resulted in names like GameStop, John?
Well, listen, I don't think it's appropriate to comment on a particular security, but the stock loan system in the United States functions quite well. We have a significant market share where we become the central counterparty between stock firms who are borrowing stock and firms that are lending stock that are also our clearing members. There are very specific rules about how stock loan works, about how short sales of securities work, the requirement to get locate prior to selling short for most market participants. There are exceptions for specialists and market makers in that regard. So I think these questions that are sort of in a froth in the market need careful study. And I'm certain that various market participants and the regulators and our academic colleagues will take a careful look at these events And then we'll have some actual facts as opposed to a lot of conjecture about what's been going on in the market. And of course, if there's a need to make changes, I'm certain that those changes will be brought before the Securities and Exchange Commission, which is the primary regulator for these markets, and the appropriate actions will be taken.
I mean, we've been inundated, as you might imagine, with questions specifically about that. How could they get north of the 100% shorting level? My assumption is that it goes back to what you were just talking about, the market maker exemptions, which are put in place. Obviously, I don't want to get deep into the weeds of Reg Show and all that fun nuance of regulation out there. But is that your takeaway as well, John? You think it was the market maker exemption, a specialist exemption, as you put it, that allowed a GameStop, just through their normal function of hedging activities, to be shorted more than the actual float?
Well, I think we need to find out what the actual story is. I don't have any inside information in that regard. As you suggested, there are facts out there. We've got to wait until the facts are appropriately presented.
Well, there certainly are a number of facts out there, including it was a fact that 2020 was an insane, throw your adjective out there, and it probably fails to adequately encapsulate the year that was 2020. From an options perspective, it was unlike anything we've ever seen before. 7.5 billion contracts going through OCC last year, including almost about 7.47 billion options contracts over there. 51% increase from the year before, and even blowing away the previous record year that was set back in 2018 in the wake of the VIX-mageddon and all the other madness that happened back in 2018. At the time, no one thought we could really eclipse those anytime soon, and yet we blew the doors off them in 2020. So, John, obviously this was a record year in just about every perspective for OCC. What are your thoughts on the completely insane amount of volume that went through your doors last year, sir?
Well, listen, the ability to handle that remarkable amount of volume is a function of the preparation of our 107 clearing members, the 16 options exchanges, which are involved in the execution of that volume, and obviously the operational resiliency of OCC itself. And I think what's most remarkable is the fact that certainly here at OCC and at many of our clearing members and exchanges, we had a very large percentage, in the case of the OCC, over 98% of our colleagues working remotely, not in the office, and we're still able to support this remarkable amount of volume. And the same is true about our colleagues at the exchanges, and the same is true about colleagues at many of the clearing members, that while the exchanges that have physical floors opened and closed for a while, we've been able, notwithstanding the pandemic and the very much different operating environment, to handle this tremendous surge in volume. These products are designed for managing risks. They enable people and financial institutions and other institutions of various kinds to manage the risks in their portfolio, to take more risk if that is something that their portfolio strategy desires to have, to lay off that risk to others who are willing to take it if the opposite is the case. So I think it's really indicative of actions and the uncertainty in the economy associated with the pandemic and other events that happened in 2020. And it's a tribute to the industry and all of its participants that these markets were available, they were resilient, and they served the risk transfer purposes for which they were designed.
I'm glad you mentioned resiliency, because that's a fact that really surprised me, and I wanted to bring it up. Of course, last year we saw, as you mentioned, the shift to remote working from an options perspective. That meant something that had never occurred before in the lifespan of these products, which is the entire industry. Even storied legacy pit-based products like Eurodollars and SPX and everything else all went 100% electronic for the first time ever. Maybe it's the diehard cynic in me, John, but I expected a massive series of issues, maybe outages, a lot of downtime, who knows, maybe bad prints, bad quotes. And we really didn't see any of that, A. And then B, the industry managed to not just continue, but put up record numbers almost month after month, every other month, beating the one preceding it. Were you as surprised as I was, John, that the industry not only survived and managed to maintain operations, but was able to do it in this record-setting environment, John, without any real major hangups?
I was not surprised, but I was very pleased. You know, the results are a function of a tremendous amount of effort by our market makers, by the exchanges, by the staff at the clearing members, by the staff of the OCC. They all went to extraordinary ends to get this done. They're supported by investments that have been made in the computer processing infrastructure and the risk models that we use for our margin system. The regulators obviously paid careful attention. Regulators, too, had a new environment to work in. We had a number of examinations by our regulators, as we do every year, but they, too, happened remotely as opposed to them coming into our offices. All of those required adjustments, but we're a pretty agile industry, to be truthful, and I think we demonstrated that very clearly in 2020, and we all ought to be proud of that.
Well, looking at these numbers, things certainly didn't slow down towards the end of the year. In fact, they ramped up coming into December, 756.9 million contracts. That blows away the previous record set just earlier that year in June of 693. Everyone thought that might be the top for a while. The question coming in to 2021 was, of course, maybe it's going to settle down. You think we could match those numbers? Oh, yeah, you did. You blew the doors off, thanks in no small part to the aforementioned GameStop fiasco there. So far, January numbers hot off the presses just in here before showtime. 843.5 million contracts, a new record, the highest month on record, up 61, almost 62% from January of a year ago. So, John, I guess the answer to that question I was going to ask you, is it going to slow down, is apparently already out. The answer is no. So I guess the corollary to that is we're closing in on 1 billion contracts a month, John. You think that's something that seemed outlandish to even say a few years ago, but now that seems very much within the realm of possibility. You think we're going to have a 1 billion contract month sometime in the near future?
Well, we have a very hard time predicting volume. It is not something that the Clearing Corporation has control over. Volume comes to us from our 16 exchanges and obviously from the millions of market participants. We certainly have the ability to handle a 1 billion contract month. The high volume contingency tests that we put our systems through on a frequent basis demonstrate that. And I think the exchanges similarly would not have a difficulty getting from 843.5 million to 1 billion contracts in a month. So if it occurs, great. We need to be prepared for that contingency. We also realistically need to be prepared for the contingency where volume drops off after some period of time. And that's why we have particular adherence to our budget and making sure that we are always acting in the best interest of the industry. We're an industry utility. We're here to serve the exchanges and our clearing members and then indirectly market participants. So we have to be ready for volume up as well as volume down. It's very nice to see this kind of volume. It will drive serious consideration by our board of directors as to whether our clearing fee is set at the right level. We, as you know, reduced our clearing fee during 2020. First time in, I believe, 5 years that we've had a reduction. And clearly, these kind of sustained volumes give us the ability, as we did in 2020, to return a refund at the end of the year to our clearing members in addition to that change in the clearing fee. All of those are a function of healthy volume. we've got to make sure we're ready for both the good times and the bad times.
Well, we mentioned the explosion of volume, including the January explosion. A lot of this is attributable to that retail phenomenon we were discussing earlier. Obviously, GameStop's very much in the headlines now, but pretty much the trend of the year for 2020 was the rise of retail in the options markets. We're hearing stories about 1 million plus one lots hitting the market that weren't there a year ago and change. And this new wave of, call them what you will, Robinhood traders, retail traders, one lot traders, call them whatever you want. There are many more of them embracing the options markets now than there were even a year ago. It's very much a revolution in the options space. And again, one of the major takeaways of the year that was 2020. I'm curious for you, John, now that you've been overseeing OCC for a few years and seeing it through a very tumultuous year last year. What are your thoughts on this rise of retail out there, the proverbial one-lot trader? And do you think this is something that the options market's going to have to brace with going forward and perhaps make some evolution to deal with the onset of these new types of traders who are coming into the market doing smaller trades? Obviously, en masse, they could have a big impact, John.
Well, listen, I think it's a good thing myself. I think that these are important risk transfer products. It's important that we have widespread participation in the capital markets in the United States as a whole. We're getting a whole new generation of investor. That's got to be something that all of us old guys welcome. There was always a question about when and how could the industry attract the next generation? Generation change always happens. People get at the, sort of the wealth accumulation part of their careers, having them have the confidence that we run fair and equitable markets, that there's fair access to those markets, and that they understand the products, the risks of those products, the strategies that are available, and of course have the financial wherewithal to meet the obligations that trading those products have. As long as those things are happening, and certainly OCC's investor education efforts are a big part of that, what you do and what this program on the Options Insider does is vital to helping people understand these markets, what the ins and outs are, what the risks are. And we should all welcome more participation, be it institutional participation, managing the risks that various institutions say. And yes, let's welcome additional retail. There have always been retail investors in these options products. That's the advantage of exchange-traded options, is they're available not just because you happen to know the put or call broker who had a small office in the sub-basement in some Wall Street building, but because you could go to an exchange and trade on that exchange with the same rules that you traded the underlying security. So, of course, we see retail investors participating in these markets at a significant level ever since they were formed in 1973. I think it's great to see more retail investors in these markets having the understanding of the products, what risk characteristics are, and it's just a positive thing. You have to, though, make sure that you understand the operation of the market, you understand the risk of the product, you've done good due diligence about the clearing member that you trade through, and you've got good sense about what your strategy is, and have the financial wherewithal to meet the obligations as they come due.
With all this talk of new traders and new participants entering the market, also comes talk of new products. John, the last time you and I chatted about a year and a half ago, we touched on crypto at the time. You said it was kind of something you had on your radar, but it wasn't really a pressing issue for OCC at that time. Fast forward a year and change, the crypto markets have evolved, indeed exploded, along with everything else. There's a whole legion of new entrants to those markets as well. So there's a lot of people looking at the world and indeed the intersection of the crypto markets and derivatives going forward out there. So I'm curious for you, as you're planning out for the coming year, where your resources are allocated. Is this a marketplace that is going to draw continued interest and perhaps resources from OCC to plan for new products going forward? Or perhaps is it the opposite? Do you think the central ethos of the crypto markets is maybe anathema to the whole concept of central clearing, John?
I think that the new product innovation is something that's driven by our exchanges, and they have a varying level of interest in crypto and other types of digital financial products. We want to make sure that we're in a position to be able to support them as they introduce new products, including conceivably in this area. It's something that we do pay attention to. I don't see anything huge on the horizon, but I don't see any incompatibility between a option with a digital underlying and central counterparty marketplace. The need to understand the risks, the need to understand the strategies, the advantage of having options on an underlying digital asset is not that much different than the underlying of a security or the underlying of a physical asset. The risks are quite similar. The transfer of risk characteristics are likewise similar. So it's really in the ballpark of our various exchanges.
Well, I mentioned the massive influx of new retail options traders last year. Along with that has come a massive new influx of listeners to our network, many of whom are new to the world of options. And so they bombard us with questions about many different topics, including one that seems to come up time and again. We chatted about this a year and a half ago, John, something that continues to befuddle new entrants to the market, talking about open interest. People are confused. They're new. They come in, they trade an option. They know they can get the trade done in milliseconds now and get a confirmation and it's all done. Yet they're confused why they have to wait 24 hours to see the OI updated. And of course, that confusion is compounded when they look out to other marketplaces, let's say crypto. We were just talking about, for example, they're seeing exchanges on that front being able to provide things like hourly open interest updates. The traders can see the fluctuations intraday. Obviously, it's not quite the same thing, a much smaller market from an overall volume and notional value perspective in the crypto space. But still, it does raise a lot of questions these days, John, about open interest. So I'm curious for you, as someone who oversees OCC over there, do you envision a world anytime in the near future where we might see open interest updated more frequently than just once every 24 hours, John?
Well, look, that is a challenging topic. The infrastructure for the marketplace is not fully there at this time, but we're certainly headed in that direction. You can't have instantaneous open interest. You need to understand how the various transactions impact portfolios. But as we move to our major transformation project as an organization, which is our Renaissance initiative to replace our existing technology with a much more nimble, if you will, agile technology, we will have a much closer to, I don't want to call it real time, but I would say an on-demand ability to calculate things that are currently calculated on a batch basis and predominantly happen during the overnight processing after trading hours. So whether we'll get all the way to multiple cycles during the day where you can view the change to the open interest, I think that remains to be seen, but certainly the underlying capabilities of doing that, open close indicators, having better information on a more real-time basis, the ability to make corrections on a more real-time basis, all of that will come as we deliver our part of the Renaissance technology.
I like it, John. You're going to make a lot of our listeners happy with that answer. Unfortunately, that music means we come to the end of our time here on Options Insider Radio, John. But before we go, we like to leave our audience looking towards the future, maybe a little bit of hope, a little bit of optimism. So if you'd like to leave our audience with a little bit of a hint, a little bit of a tease of what you and your team have planned for the year that is 2021, maybe some interesting new initiatives you have up your sleeve, John, now is the time. The floor is yours, sir.
Well, thank you very much. Obviously, we are very focused on our Renaissance project, transforming how we use these products, how we support the industry. We will be moving our securities lending business to a much more digital and distributed environment using so-called distributed ledger technology. I think that's very exciting and supports the growth of the securities lending business. We'll continue to support the new product innovation of our exchanges. We did add the small exchange to our portfolio of futures exchanges during 2020, and we'll continue to support new product innovations by all of the existing exchanges, but most fundamentally delivering increased business agility to our clearing members through the Renaissance project and continuing to make sure we have the operational resilience and the financial wherewithal to support the huge growth that we're seeing in these markets. We really appreciate all of the participants, our 16 exchanges on the options side, our 2 futures exchanges, the securities lending market, 107 clearing members, and all of those well-established as well as brand new market participants out there, our market makers that supply all of the liquidity to the options markets in very creative and innovative ways, and look forward to continued success. We're off to a great start. We had our first 60 million contract trading day, and we are going to continue to grow with the industry and look forward and really appreciate your contribution to investor education as well.
Well, thanks for taking some time out of your busy day, John, to join us here and give our listeners an update on everything that's going on over there at OCC. You guys can learn more about everything John is talking about the organization that backstops all of your options trades. You know where to go. TheOCC.com is the place to go for all the information and a lot more. And on behalf of John and indeed myself, I want to thank all of you out there for joining us today. Remember, if you need a little more, and a lot of you still have questions about everything going on out there, it's back again, of course, tomorrow, Education Wednesday for Options Playbook Radio and Options Bootcamp. Thursday, Double Dose, you have TWIFO, This Week in Futures Options, as well as the Option Block Friday Volatility Views. Then it all kicks off again next week, all the way through to another Interview Tuesday and another episode of Options Insider Radio.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.